Thank you, Alia, for the opening remarks. To start off today's session, I'd like to welcome our very own Christian Kuntz, Head of Innovation and Group Strategy at the DIFC Authority, for our first panel discussion of today on payments and money services. May I please welcome all these guest speakers on stage, please. Thank you so much.
Thank you, everybody in the room and joining virtually from Singapore and around the world. I'm very excited and honored to be here with this great panel today on payments and opening up a very interesting conversation. So to start off, I will introduce our panelists one by one and the companies they represent. On my right, we have Daumantas Grigaravikius. He's the country manager of UAE from eBury. eBury has been helping clients mitigate currency risk and reducing international boundaries since 2009. To date, they have a presence in over 23 offices globally. Last year, they transacted over $23 billion in foreign exchange. They're backed by one of the largest European banks, Banco Santander. And Daumantas himself, he's actually the youngest country manager within eBury globally. He grew the team together here in the Middle East to 400 clients in the last 2.5 years, and from 8 to 26 people during that short time. He's also been leading the team to get the first money services license from the DIFC. From our new regime that we put in effect earlier this year. And I'm very excited to hear his view on some of the topics about payments in the region and globally. Then we have Rinki from Rinki Singhvi. I hope I pronounced it properly. She's the head of strategy and operations from MamoPay. MamoPay was founded by 3 ex-Googlers. Recently, it's the youngest fintech we have in this panel today. It's a peer-to-peer wallet enabling secure, instant, everyday payments. They have just recently, or they're just in process of launching their app. They are part of the Visa Fast Track program, and we're very happy they're part of our DIFC, DFSA innovation testing license program as well. Rinki is the head of strategy and operations, as I mentioned. Previously, she worked actually with me together at McKinsey and before at Deloitte and ADNOC as well. So we're very happy to have you on the panel today as well. Then we have Sander. I think you're the most recent addition to the UAE. I think you arrived just a few weeks ago. Sander is the head of Middle East for Adyen. Adyen, as most of you know, is one of the global multi-channel payment companies offering businesses a fully outsourced payment solution which enables companies to accept payments from anywhere in the world through all sales channels, online and offline. And I think you have over 250 payment methods and over 187 transaction currencies. Sander is joining with over 15 years of experience in payments itself. He has been a key player in Adyen since the very early days, 2010. I think you've joined. And prior to joining the Middle East, he actually led in the last 5 or 6 years the expansion in Latin America. And I'm very curious to hear more on the parallels to South America or Latin America and the Middle East and how he's thinking about the trends here and the opportunities. And lastly, we have Sebastian Reis from Checkout. He's the EVP on ecommerce for Checkout.com. I know him since a while. Checkout, as most of you know, one of the highest values fintech unicorns in the world. Also, he's leading the international business for them. He has a lot of experience in MENA and APAC. Checkout is built on 100% proprietary technology and provides an end-to-end service that handles every part of the payments process, providing complete transparency across the entire value chain. Over 180 currencies are offered and a lot of international and local payment schemes, and we're going to hear more about it. Sebastian himself, He joined in 2012. I think that's the same year when Checkout was founded. Also from the very beginning, he was essential, instrumental in the rapid expansion of Checkout, and mainly has a lot of experience in the MENA and APAC region. And very excited to have this great panel here today and talk about payments. So maybe we just jump into the question, and the first question is really about, we know that in payments in this region, there's a big focus on driving digital payments. There's a focus even from the government to move towards a cashless society. We know in the last years, and even more this year, payments have been accelerated. And maybe starting with Sebastian, I know Checkout has been around here for a long time. You know the market inside out. You also issued recently a report on connected payments in the region. So what's your view on the opportunities that you see in the region?
Yeah, thanks. So as you mentioned, I mean, when we got started here 8 years ago, it was definitely a very different landscape. I think when I joined, the average UAE merchant was something like 90 to 95% cash on delivery, and the rest was kind of taken up by cards. Today, fortunately for us, we see a slightly different landscape. Our report showed that across the GCC, trust in digital payments, adoption of digital payments, intention to continue using digital payments, all these metrics are trending massively in a positive way. And specifically in this year, we had specific events that helped drive that adoption to highly accelerated manner. So for example, in Saudi, as part of the initial lockdown rules, cash on delivery was actually banned. It was viewed as an effective way of transmitting the virus. Everything shifted to digital payments. It's also worth mentioning that a lot of this adoption was driven by merchants that have come into the region, educated the consumers as to the convenience, the security, and the sort of trustworthiness of paying by card. So specifically, if you look at food delivery apps, ride-hailing apps, these have all boomed massively in, I'd say, the last 5 or 6 years. And given we have across the GCC and actually the wider MENA region a very young, digitally native population that has the sort of highest usage rates for YouTube and has some of the highest per capita spend on mobile devices, all of this lends itself nicely towards driving greater adoption of digital payments. So, to answer your question of how do I see the opportunity, I think we've already made massive progress over the last decade. There's still quite a lot to be done. It'll vary from country to country, but broadly speaking, there's still sort of intransient 30 to 35% of the population that insists on continuing to use cash on delivery for various reasons. But overall, if going back to our report, if you ask about do you trust payments? Do you intend to use payments, digital payments in the future? All of the responses that we were getting there, and from what we see in our data, and how merchants are sort of driving user journeys towards card payments, I think that we're still at a relatively early stage, and there's a lot of room to grow.
Great, thank you. Rinky, as sort of the Checkout being the longest, let's say, in the region, MamoPay being one of the newcomers in the region, how do you see the opportunity from a MamoPay point of view?
Yeah, thank you for the question. Yeah, we're the new kid on the block, but what's interesting to note is that over the last 8 years, as Sebastian mentioned, the focus has been mostly on digital payments and focusing on the e-commerce and accepting of online payments and pushing towards card usage, whereas the P2P and wallet space is still relatively new. There's much to be done in digital payments as well, but like the wallet and P2P space, if you look at it, there's a lot of white space in it, and for us, that's being the new kid on the block, that's a very exciting area to start off in. To answer your question on how do we see these opportunities evolving, or what opportunities are there, There's a lot of enablers that exist right now. So there's a lot of government push. All the major governments in the region, UAE, Saudi, they all have visions to improve fintech uptake, and the pandemic has sort of accelerated that even further. So that, along with the ecosystem that is naturally coming about, investors, places like DIFC, these enablers combined are allowing us to pursue a couple of things, which is creating a product, creating a payments product that the end users love, which is individuals. So far we have been the region has been serving a lot of businesses. The peer-to-peer space, or the individuals moving money, that's sort of that's a space that all these enablers will allow us to start operating in. The other thing I would say that is a big opportunity is bridging the gap between the banked and the unbanked. And that's been something that has been coming up in our research that we've been doing, that while the financials, there's a big infrastructure and a lot of financials, the infrastructure does exist, there is a whole section of people, about I'd say some 6 million people, domestic workers and university students who cannot get bank accounts, that would really benefit with this bridge that companies like MamoPay can provide in the system. And lastly, another opportunity, a big one, is the e-commerce space, where it's projected to grow by 20 billion in the next 5 years, and probably even further now that we're seeing new numbers come in. It's another space where an easier way of accepting payments would be much needed, and we see that as a big opportunity. Yeah.
Great. Thank you. Sander, we talked about it a little bit in the introduction. You've spent last couple of years in Brazil looking at Latin America. How do you see parallels to what you've done there? And how are the opportunities same, different to what you're seeing here?
Well, Brazil has been fascinating, I must say, both privately as well as professionally, and as a company to be part of that. Just to give the audience a bit of an idea, 10 years ago, there used to be 2 acquiring banks, one for Visa, one for MasterCard. That was your choice, right? So fees were abusively high, and there was literally no innovation. Then the central bank opened it up, and I think by now there must be over 40 acquirers in the market. International entrants, ourselves, Checkout, others are there. So that journey and being part of it has been it has shaped us as a company as well to be able to operate in other markets. We set office there in 2011. So very early on, we've been part of an ecosystem that has been maturing. And that means you can be, and we've been actually helping regulators in their thinking with the experience that we have from abroad. And what you see is that the changing landscape and being part of it has been very appealing for ourselves, but also for our customers. So you see that we have a lot of pressure from international customers to offer the same kind of products, features, service levels in other markets. And it's simply not there in a lot of cases. So the moment a regulatory environment is very appealing for us to step in there, which is happening here, we can actually put on a table products that are interesting for merchants. They will be challenging existing players in the market that have been around for a while, and even if they have been unable to innovate over the past period, they will have to, right, in the interest of the merchant. So I think that experience has been very interesting for us. And that's something we would like to contribute in the same kind of fashion here in the region as well. And what we see I mean, it was not only Brazil where we've been operating, and we've been operating all over Latin America. And in markets where, take Chile as an example, there's one acquiring bank that hasn't changed over the last, I think, 20 years. We've been trying very, very hard to talk to regulators, to talk to that bank, there's simply no incentive to change. There's not, right? So it's not going to change. What we've seen here, and it's one of the reasons, obviously, why we've opened our office here, is that here there is that hunger for change, for growth. It's coming from the country within, I would say, but it's also, we as a company feel that pressure from our own customers that say, hey, there's something happening there. We'd like you to work with us there.
Great, thank you. Tamantas, eBury focuses on supporting SMEs, which is a very, very important topic as well. We heard merchants, obviously, there's a bigger pool of SMEs. From that perspective, what do you see as the biggest opportunities, and also, like, how does having your own license now give you an advantage in shaping those opportunities?
Yeah, I'd say SMEs probably have some different needs than the end consumer, but I think the biggest opportunity we see is digital transformation for a business, because, okay, digital payments is one thing, but if you can digitize your operations, it drives operational efficiency, which, if you're looking at costs, which a lot of SMEs will, is probably a greater saving than, shaving a few pips or percents off a transaction on currency. So that's kind of the biggest opportunity that we've seen, because a business would rather have an online platform where they're able to make payments, receive money, issue their own bank accounts in different currencies to start expanding into different regions. And then, of course, do all the basic things like, pull your statements and things like that. So when you have SMEs in the region who suddenly go from working with paper forms, going to a bank and issuing a transaction, to making everything online, straight away you'll save a massive amount of time for the people that are working in those departments, treasuries, which can be deployed into other areas of the business. So I think that's probably one of the biggest opportunities we see, because ultimately businesses will want to drive that type of efficiency. And in terms of the regulation, I think, well, look, it's great for us to be able to show our customers that we're not one foot in, one foot out. It's committing to the region, and that helps us when we are dealing with existing customers, but also speaking to new customers, because ultimately we can safely say to them, look, we're within one of the best regulated free zones in the region, and we're here to stay. And then, from DIFC's perspective, it's great because everyone we've spoken to is very forward-thinking. Everyone we've spoken to is collaborative. So where we are now is where we are now. And in the future, we are pretty confident that when we approach the regulator, when we want to look into different areas of the business, they will accommodate. And I think, now it's kind of just a start, laying those foundations, and we'll see where they go.
Excellent. Taking it a step forward, the conversation, we heard a few nuances from Sebastian already, from Rinky before, like COVID has accelerated this path. We knew that payments are growing globally in the region, but I think COVID was a boost for cashless, for digital, and would like to hear your views on, how did that impact your specific business model and your business, and maybe starting with Rinky. Obviously, the UAE has a national cashless strategy since a while. How is MamoPay supporting that strategy, and how did the pandemic kind of accelerate this journey for you?
Right. So even before the pandemic, like you said, the UAE had a strategy for digital payments and going cashless, right? It was, excuse me for quoting numbers, but I think there was like a 7% projected growth over the next 5 years for digital payments. If you just focus on the peer-to-peer payments, even before, and this is just pre-COVID, there was projected 5 times growth, going from like 20 billion, this is the entire MENA region, 20 billion to like 120 billion. Now, with the pandemic, what we've started noticing is 2 very interesting things, that there's a digital adoption all across, and not only in commerce or e-commerce, but in general, just on social platforms as well, right? So people are becoming more digitally savvy and more mobile savvy. Generations that were not open to that sort of, that mode of communication has now all of a sudden become open. And while it's not directly, linked to like e-commerce, but it does move towards a behavior that enables us to position our product or digital payments in more like it's more relevant now. The second thing is even beyond cashless, there is a contactless trend that we've started noticing, and if we were just looking at some Saudi numbers, and we were completely blown away by it has to do with what was mentioned earlier about cash on delivery being sort of like not available or not an option. Last year at the same time, in like around April, there was about 30 at point of sale transactions. The contactless payments were about 30%, and this year the same thing is about 80%. So we've gone from cashless to like wanting complete contactless payments. And so that's sort of what's happening with COVID in the market. The way we companies like MamoPay see and leverage this is just by providing a whole suite of products. So we do have our B2C solution, which is the peer-to-peer, so that makes it easy for individuals to move money. But at the same time, there is a B2B2C product, which is which makes it easier for SMEs and social media sellers to accept payments. There's an increasing trend of social media sales that's happening now, so or social media business that's happening, sales through social media. So there's a lot of acceptance of that product will allow that particular section of people to accept payments through or digital payments. And finally, our last product that we're in talks with launching is like a virtual prepaid card, which is again going back to the point of contactless and bridging the gap between a wallet and a prepaid card and making banking or finance available to the unbanked. Yeah.
Great. Excellent. Sander, maybe from the Adyen point of view, your products are combining online and offline, right? How do you look at those channels now in the UAE, and also in context sort of of the pandemic implications, and what does Adyen bring to the table in this new normal?
Yeah. Well, being available both online and offline processing in both channels, obviously for us as a company has been a blessing this year, right? You see overnight lockdowns happening, and you see transaction coming online, and then malls open again, and we see the transactions coming in offline. So as a company, it's been a very comfortable position. But in the greater scheme of things, we have seen channels merging, and we see shoppers expecting the same kind of frictionless payment experience across channels. And it takes time for markets to understand. In the market where most retailers, let's say if you're a retailer and 5% of your business is online, how much attention do you give to projects that cater for your online business, right? Now, when overnight 5% turns into 100%, that's a whole different story. And going forward, projects that are focused on improving an e-commerce channel those projects will get better funded within companies. I would say it's a risk if you would still see those channels separately. And I think there's some regions and there's some forward-thinking merchants that we work with in other markets that actually see that all as one, from a brand perspective, it's one experience for the shopper. And that is why I think there's still room to grow here. If I go into a store here and buy this water, it's an anonymous purchase. But if I go to if this website has an online channel and I buy something, I have to leave details, so you know way more. If that company would work with our infrastructure online and offline, the moment you walk into a store, you put your card in, we link that together based on card use. And a good example here is, for example, a Subway, where we work with all their stores in the locations in the US and their online delivery. And if you normally buy a sandwich, nobody really knows it's you, right? The moment you put your card in, you leave some kind of data. And we help Subway, for example, determining where to open new locations, what is card migration, shopper frequency, and those kind of things. And I think that's what we bring to the table in all our markets, including the UAE. And in terms of the pandemic, it will also make checkout processes easier, whether you buy something online or offline. If we have data for you on file, even a physical transaction can be done against a card that you've left previously online. And that is very interesting. And also the other way around. You can go into a store, make a purchase, and for example, sell a subscription for an online or a digital product through an initial purchase on a terminal. And those are very interesting models that do not exist in markets like the UAE yet.
Okay, excellent. Damantas, maybe shifting a bit the conversation of maybe some of the positive trends of the pandemic to maybe more of the challenging side, working with SMEs. So how did the pandemic kind of impact your business or your clients' business, and how did you kind of manage that or support them in that very difficult time?
Yeah, I mean, undoubtedly, we felt the squeeze because SMEs felt the squeeze. That's just the fact of it. But what was really interesting is actually we saw, business models that thrived prior to COVID not perform as well during COVID. And so our focus as a business was to kind of, to use the old kind of saying, is follow the money. At the end of the day, if certain industries that we typically service were not performing very well, it's not that we abandoned them, but we put some energy into the business models that work, which I think a lot of businesses have seen transform their business model in the UAE and worldwide. I'll be the first to say that probably, like, from a cashless perspective, what we bring to the table is far less than what the rest of the panel brings to the table. We are cashless in a sense that all of our payments are bank to bank. We don't take any cash at all. The UAE is the only place where we actually take checks. That's about as close as we get to cash. But I think it's all kind of consumer driven at the end of the day, and that does impact us, because if consumers want cashless payments, the businesses will follow that to make sure that they offer it, and that means that more and more SMEs, if they're doing the cashless payments and more digital payments on the end with their consumers, they'll also become more comfortable with that with suppliers, the bank-to-bank transfers, and kind of eliminate the cash. So I think it's been an interesting time. A lot of things have changed, some for the good, some for worse. But I think ultimately it's just a natural way that businesses evolve, and it is survival of the fittest. And I think in this day and age, the businesses have the tools to really kind of change the model and how they work. And hopefully we can bring something to the table because we already facilitate those kind of payments.
Great, excellent. Sebastian, from your point of view, I think you've the last 9 months, like how was it for checkout, and also considering, it's great for your type of business model if everything moves online, but suddenly the technology also needs to support that. So what were kind of the trends? What did you see in the last 9 months overall for the business model, and how did you manage to kind of support that demand?
So, two parts to your question. With existing merchants, obviously, it's obvious that if everything goes into lockdown, the spending doesn't stop overnight. It just shifts from brick and mortar to online. The overall volume growth was pretty impressive, to be honest. Mainly because what we saw was not so much, pure sort of online shopping, let's say. It's just that a lot of the sort of day-to-day necessities, all of these were suddenly being purchased online. So, online groceries, online food delivery, just having stuff come to your house so that you can kind of get through your days. These would be payments where traditionally e-commerce may not have been the first thought that popped into somebody's mind when they were looking to satisfy those needs. And that goes back to my earlier point, which is that I believe this year has accelerated trends that were happening anyway, but accelerated them in a way that they're now going to be lasting. Because people who suddenly realize that they don't need to sort of traipse around the supermarket to get certain necessities, but they can just have it delivered at their doorstep same day in most cases. In our report, when we started asking people, what is your intent to keep using these apps? I mean, they admitted to having stored their card on file with these various apps. I mean, these are all things that signify for us a lasting shift towards using these channels. What we also saw was, and this goes back to Sander's point earlier, some of the more traditional retailers that historically had just been not paying enough attention to e-commerce, thinking it was a trend that they had time to observe, make a plan around, and then build towards. They were obviously caught on the wrong foot, and one of the more impressive statistics that came out of the last 9 months for us was the volume of applications that we were getting from one day to the next of people looking to get online desperately as quickly as possible. And I'd love to say that these were, small mom and pop brands that, but it wasn't. It was big brands that, just had historical outlets that were working fine for them in a face-to-face environment, who suddenly realized that demand was still there, but they weren't able to service it. And there it really then becomes a question of, how sort of flexible is your technology? How quickly can you get somebody up and running? Do you have the products that allow them to get up and running quickly? Because again, a traditional e-commerce project for a large merchant, by the time they're done integrating, having built a website, et cetera, et cetera, et cetera, we were having scenarios where people were like, you know what, I'm going to sell through Instagram and TikTok, and then I need to send a link, and that's how I need somebody to pay. And that allows me to get going, from today to tomorrow, and we're good to go. So, it again, it sort of, it shifted the mindset slightly. And from our side, it was more a question of sort of dealing with the demand in the sense of, processing applications and making sure that everybody gets the support they need in order to make this experience as seamless as possible. And then, finally, this goes back to some of the comments that were made earlier around social commerce. What's also been incredible to see is how many different outlets people can now tap into in order to start selling in a card-not-present environment when required to do so. So, we see a huge pickup just also in just pure social commerce. And these can be sort of single persons who are producing something or baking something or, whatever it may be, advertising through an Instagram page, and then sort of concluding the sale through a sort of WhatsApp, Facebook Messenger type experience with a payment link. So this goes back to my earlier point. Just the amount of opportunity exists in the numerous new ways that people are discovering of taking advantage of the online trend. And there it's just about being readily available for them, helping them get up and running as quickly as possible. And then, as they sort of grow, helping them optimize, because whatever was done overnight yesterday is obviously not something that may be future-proof. And they're having expertise from a global footprint and working with some of the large retailers. You can really chart out for them, as you grow, you need to start thinking about this and the other. The final point I'd make is really quite specific to Saudi, because we were talking earlier about contactless and how that sort of picked up. Again, obviously there was some welcome intervention from central banks and regulators, lifting the limits on how much could a contactless transaction be paid for. So I think in the UAE and Saudi we saw those limits lifted. But the other trend that we see in e-commerce specifically is it's probably the highest instance of using Apple Pay that we observe globally. Okay. So the point I was making earlier about having a sort of very young, digitally sort of savvy population, these payment methods, I mean, I wouldn't say they're revolutionary, but they are quite novel. I mean, it's not something that's been around for 50 years like a traditional Visa card. But the adoption rates and the repeat usage rates and the extent to which the banks in Saudi sort of support using these payment channels that's also been sort of very supportive and conducive to helping this industry kind of grow the way it has.
Excellent, interesting. So maybe moving to the last question, and we open it up for questions from the audience. Damantas, what's unique about this region if you look at your global business, and what do you see as trends for the next years?
Sure. I think there's a lot of unique things about the market, but the biggest one that stands out is, I mean, eBury is in markets where they're quite developed, and although might have large offices, the growth is not that large year on year. The UAE is probably one of the fastest growth markets that we have as a business, and I think that's kind of the biggest opportunity that we see with the UAE, because usually you have a bit of a sell-off, where you have growth. There isn't quite a blueprint of how to do the business or a safe regulatory environment, whereas here that's not the case. So here you have growth. It's kind of almost like a second boom of Dubai. Previously it was real estate. Now it's around fintech. It's around financial services, and so you have that growth. But at the same time, you have a pretty safe environment to do it because, as I said, the regulators are forward-thinking. They have things in place, and if they don't have them in place, they see what's happening out there, and they say, okay, well, this is a place we need to be, so we'll create something, put out consultation papers, whatever it might be. So I think that's the biggest difference. Of course, there's lots of similarities. I mean, at a grand level, we offer the same services here as we do in other places. But yeah, I think that's the kind of main unique part of the UAE in comparison to other offices. In terms of trends, I mean, for me, I think the most interesting one is probably open banking. I know there's a discussion later about this. The reason it's interesting is, I suppose when it first came out, it was like a bit of it was a novel topic, but now it's starting to become like, this is going to be the reality of how things work. And at the moment, it's just the tip of the iceberg. It's around payments. It's around I can connect a couple of banks together and I can move money between them. That's pretty simplistic. But when you start introducing all different asset classes, all different products, that's when it becomes quite incredible, because the user will be able to choose whatever they want to choose. There's no hiding from the competition. That's probably, from a business perspective, that's I suppose, like the scariest part, because ultimately the user is there. They have 5 companies, and if you're not cutting it, then you're out. So I think that will grow a lot of good competition, and the customer will actually benefit from it. And the UAE specifically is incredibly well placed for it, because being a young nation, 49 years old, just celebrated recently, there is almost like less legacy systems, if I can call them that, that you might have a nation that's been around for hundreds of years. Everything is pretty digital. And, we have UAE Pass, you have Dubai Now. And so when it comes to rolling out something like open banking, the kind of foundation is already there. So, a lot of people are using their phones and these apps to pay for all sorts of things, so that you can easily connect your open banking to it, and then suddenly, there you go, you connect all your banks, and then all these other products will come. So I think that's one of the main interesting areas. And yeah, it'd be great to see how it unfolds. I think in Singapore, they are already connecting SingPass to the coming open banking regulation. And here in the region, Bahrain, I think, is the first one that's already rolling out regulation for it. So it's coming. If I'm not, someone can correct me if I'm wrong, but I think 2022 is the target for the UAE to kind of roll out open banking, and I think that will be a big game changer, both just from like a personal consumer point of view, because I would love to see it, because it'd be great to just have that ease, but also from a business perspective, it will change business models for a lot of financial institutions.
Fantastic. We hope that open banking will will come even next year, hopefully faster now with the pandemic, obviously. Sure. But yeah, I mean, the agenda is there, and we see the trends. The MENA Fintech Association, where we contributed as well, just issued a report on the vision for open banking in the Arab region. I think we'll hear a bit more about it later as well. Very exciting. Rinky, from a MamoPay point of view, what's unique about this market? What's the trends you see?
So yeah, there's a very interesting thing that we notice is on financial inclusion that makes this region particularly very unique. So there's a low rate of financial inclusion if you look at overall, the kind of things that people do with their within the financial services realm, right? If you look at credit, credit ratings or having access to credit, bank accounts, digital payments, the rate comes down is between like 30 to 40% financial inclusion overall. Whereas on the other end, there is a lot of infrastructure that does exist. There are, in terms of just the number of banks that are present in the region, both local and international banks, pretty much everyone's present in the region. There are the point of sale services or the penetration of point of sale. The growth is pretty high. So it's a very contradictory sort of space right now, and what we feel is going to be sort of the requirement for the region would be the education that is required, or the government support or the regulatory support that is required to bridge this sort of gap that exists right now. That I would say would be like the main thing, but also, there's a lot of room that is there for the incumbents and fintech companies and governments to start, collaborate on. That's a very nascent and very new thing, we expect that will sort of like be the foundation based on which the region will progress to the levels of our Western counterparts. I would say that's sort of like the view. Yeah.
Great, thank you. Sander, uniqueness as much as you've experienced or discovered so far, and trends.
As a company, we like to challenge the status quo, and as a result of that, we see over time that the quality bar keeps rising and rising, and that's a trend that I think you'll see here in the market. And a good example is my own experience here the last couple of weeks. I'm still working on my local card, so I have international cards, from very simple bank cards to credit cards. And all of these cards have been rejected at one point of time over the last couple of weeks. From NFC to a chip and pin or an Apple Pay transaction on my Amex card. It has never happened to me before. It's not a balance issue. It's literally... it's a technology issue. And I was at GTEx in a panel session where there was one of your colleagues, Mo, was there as well, and they spoke about being able to walk around here without your wallet. I can't. My experience so far is I cannot go outside and go somewhere and rely on the infrastructure that's there. It will probably change when I have a local card, but there's something behind this. And if it would be an Adyen terminal, and my card would be rejected, within 5 minutes I would call someone and say, what's going on here? Even if it's a single transaction on a day, we are at the final end of a purchase journey, the very final end. You've got someone in your store, online or offline. You have had someone helping in an offline, and it's money you spent on getting that person to purchase. And the moment they want to give you their money, it's rejected. That's the most expensive reject you can get. So that's where I think in terms of trends here, you'll see there will be more attention to that detail. Normally in a physical environment, 98, 99% of transactions go through. Online, depend on the business, somewhere with 60 and 90 or whatever the amount of attention you give to it. But you will see merchants going to put more focus on this. They're going to be challenging us. They're going to be challenging you on, hey, we're on this authorization rate. It needs to go higher. We don't want to lose those customers anymore. And one of the things that I've seen in most markets that are maturing, the profession as payment manager, you will see them more and more. I've seen that also in Brazil. Years ago, it just didn't exist. Now every company, almost every sizable company will have a payment manager, which is a very hybrid role in a company that looks after technology, vendor relationship, and a lot of other things, with the objective of making sure as many people are able to finish that purchase. So I think in terms of trends now, after this whole pandemic has changed the dynamics between online and offline, I think overall we see that people will start paying more attention to detail and to quality.
Very interesting. Thanks, Sander. Sebastian, like also your perspective on uniqueness and trends.
I'm going to pick up where Sander left off because he touched on something that's extremely important. You know, even in the report that we published, we saw that rejection rates in the region are significantly higher than in other regions. And what actually compounds the problem from the merchant point of view is that the consumer here is less willing to retry than a European or an American or an Asia-based shopper. So we're at that moment where in a significant number of cases, you're still potentially dealing with that customer's first online experience or one of the first online experiences. And if that experience is ruined because of a decline at the acquirer level, you're not helping anyone. So the decline rate problem is definitely an issue. What makes this region somewhat unique when tackling this is that it still remains predominantly a sort of question of, do you know the right person to go sort that problem out? Historically, in other areas, you could potentially lean on Visa or MasterCard, but out here, what matters is having the network, being able to call the bank that rejected that transaction, speak to the person in the issuing team, and have them figure out what's going on. Because more often than not, these rejections are not driven by a conscious decision to make online shopping difficult. They are a result of a legacy system that has been managed by teams that have had people cycling in and out for a number of years. Somebody tweaked the risk rule once because there was a fraud attack back in 1998, and then he left the bank and nobody ever looked at it again, and ever since then, that card just gets rejected every single time something happens. So when you come to these banks with relevant data, relevant action points, showing them how much it's costing them, because obviously the issuer loses out the interchange in that transaction, how much it's costing them in terms of customer experience, and you sort of proactively work with them, which is something we do for a lot of merchants, because this is a problem that exists both for merchants from the region, but also merchants outside the region looking to sell into MENA. These are conversations that over the years, we've worked with some of the big banks across the GCC, and having those connections is extremely valuable now because you're kind of starting the conversation on the right foot. They know they can trust you. They know they're not going to open up some risk rules and suddenly have a bunch of fraud coming through. These are things that you build up over time. And here in the region, because most of the large financial institutions still view e-commerce with a somewhat weary eye, it's not like they've fully bought into it and they'd like to avoid being victims of fraud for sure. These are conversations you can have in a much more constructive manner. In terms of trends, what I think we're going to see is enablement of online business models widening. So what I mean by this is today, we still have a situation where various countries in the GCC or in Egypt, the payment methods are not adapted to all the options available. What do I mean by this? Today, if in Saudi I want to sign up to a subscription service, I'm going to have a problem because my debit card simply will not work when that recurring transaction gets initiated 1 month or 2 months or 3 months later. These are all things that today prevent some of the very successful software as a service model, or do I want to have Spotify or Netflix where I just leave my card and it kind of runs in the background without me having to be involved in the process. These options today do not exist for domestic merchants to tap into. Similarly, if you're a ride-hailing app and you want to conclude the ride, have the person step out and have the payment happen in the background, it's not possible today in a bunch of the GCC countries. Now, again, this is not sort of willful sort of damage being done by these schemes to the ecosystem. It's just a legacy of this was a point-of-sale solution in a brick-and-mortar environment. Everybody's fine with a chip and PIN or some form of authentication that happens, and they carry that logic over into the card-not-present world. I think most are aware of it, and one of the trends we're just going to see is the technology underpinning these schemes slowly being opened up to allow the full array of transaction types, and that'll then again spawn a new generation of companies and merchants in the region that tap into the business model that has now been made available to them. So that.
Thank you very much. Just looking at time, do we have time for questions or?
Yeah, we have a few time for, we got actually a few questions from our global audience.
Okay.
So the first question for our panelists today, first of all, congrats Iberia again for being the first payment services here in the DIFC license. Congrats on that. So a question from our global audience logging in. Given the increased drive towards a cashless economy, what do the panelists think of the security robustness of the infrastructure in the Middle East?
Go ahead, please.
This is actually something where, without hesitation, I can say it's amazing. We see the lowest fraud rates. We see the lowest incidence of fraud attacks globally here in the Middle East. A big part of this is because of how the issuers notify cardholders on every transaction. There's an SMS every time. There's an email. Adoption of 3D secure, so on OTP password authentication-based processes when you're paying online. These have been present from the beginning, and all of it kind of has combined to create a card base, so cards issued by banks from the MENA region that at our level we consider to be far more trustworthy than some other countries where these controls are simply not in place, and it lends itself more easily to being a victim of fraud. So and what's really encouraging for us is that 8 years ago, like I said, when we were processing the 5% of transactions that were not cash on delivery, this would not have been a very meaningful statement. But as we've grown, that trend has never really changed. So we've not seen, I'll touch wood on this one, don't want to jinx it, but the robustness and the amount of attention that is paid towards maintaining that robustness, I actually find exemplary.
Excellent.
Thank you so much. And the final question from our online audience are, what are the weak links in the payments chain and what are the mechanisms of preventing fraud?
I don't know what
similar.
all right. The weak links, I mean, again, given what I was just saying, I actually think we have a very, very robust setup today. In terms of weak links, it's in some cases, and this goes back to what Sander was experiencing, I'd almost say that the robustness is in some cases overdone. It's relatively easy to have zero fraud. You just reject 100% of transactions, right? But that's obviously not what you're sort of aiming for. So I think the main area that's going to be looked at more closely and that will have to be tweaked and optimized is to find a healthy balance between risk appetite and preventing fraud. And here again, what's encouraging for me is that the way the domestic debit switches are thinking about this, the way that Apple Pay is being adopted, which is a very secure payment method, and just the way the issuers are actively working to prevent their cardholders from becoming victims of fraud. If I compare it to other countries where I've lived and how quickly my bank will reach out to me if they suspect that a transaction may not have been initiated by me. In some cases, you just answer with a yes/no sort of SMS, and it's taken care of. There's room to preserve that, but also accept that the UAE is a hub for international travelers, as a hub that is shopping globally, because we have a lot of international merchants selling into the region. There will be scenarios where it's not necessarily always going to be a Saudi card transacting with a Saudi merchant through a Saudi acquirer, and you need to cater for that demand as well. So I hope that answers the question.
Thank
And
you.
to add to that, I think the weakest link is probably ourselves, right? It's people. And the risk is that you see an overreaction if fraud actually happens. The fact that my cards are rejected probably comes from the fact that as a company, we like to accept all cards unless someone is probably a fraudster. We've seen a lot of markets by default, international cards are rejected unless a merchant has a large international merchant base. It's a complete different mindset. And if you now see that the majority of your business is online and you see an increase in fraud, that you suddenly close that gate completely. And I think you need to if you do business online, you know you're going to have to write off a certain part of your business as fraudulent. It's unavoidable. As long as that is compensated by additional sales, you should be good. And I think that should be the starting point.
Thank you so much.
Great, thank you so much. I think we have time for one more question from the audience. Yeah? Two questions. All right.
Good morning, hi. Just in terms of the international tourists that come into the UAE, right? In terms of the international visitor spend that comes into the UAE. I know we've been talking a lot about domestic merchants, but when domestic merchants are processing cross-border international cards, right? How, IDN and checkout, right? How exactly are you helping merchants from the cross-border fees? I know international cross-border fees are always on the higher side, right, compared to the domestic cards. So how do you help and when I'm talking about merchants, I'm talking about any merchant who is, whether it's retail, whether it's hotels, F&B, processing international cards. How what's the strategy there in terms of helping merchants reduce those very, very high cross-border fees and merchant fees that they have to pay out today?
Well, in a physical environment, opposed to helping them reduce the fees, there's also the opportunity, right, with DCC. So if someone comes with a European issued card in euros, we give the opportunity actually to pay in euros in a lot of countries, but it's allowed. It's not allowed everywhere. And then the margin actually on that FX transaction shifts towards the merchant. So to basically change it from a problem towards an opportunity, I think that's essential in this sense.
I mean, in an online environment, the optimization, to be honest, will also depend on that merchant's willingness to expand their footprint, because the card schemes, for reasons that are probably quite obvious, are very defensive in terms of how they allow an acquirer or a processor to book a transaction. Now, for a large e-commerce merchant, one of the easiest ways to start optimizing is to create more booking centers or merchants of record in our parlance. So helping merchants understand the impact of this, which countries would make sense based on their transaction data, or where there's regulated interchange, or for numerous reasons that they can kind of factor into this sort of business decision. These are very consultative conversations where you're really helping them to understand, because it's not always, cost is going to be a large driver, but the other one is going to be acceptance rates. So, somewhat ironically, one of the toughest markets to get international transactions approved in is the US. So if you're based in Dubai and you're building a business model around selling exclusively to US consumers, you're going to have a problem. It's much, much better being aware of that before you start spending money on Google AdWords and getting people into your store and then having, rejection after rejection after rejection, and your sort of your business model no longer makes any sense. Ultimately, I think we just need to be realistic about the fact that we swim in a relatively constrained ocean of rules, both regulatory, card schemes, business interests, as may be. Understanding those rules, helping the merchant to understand those rules, and helping them to figure out what works best for their business. It's not so much a question of technology, it's more a question of knowledge, and how do you share that.
Great, thank you so much. Do we have any more questions, or? I think we were quite sure. Just the last one.
Okay. Great panel, by the way. Thank you. One of the questions I had was, we can talk offline perhaps, is on the notion of security. But we take for granted that things work here well because of multiple layers of security. Do you guys worry about the beginning of the transaction, which is to verify and understand whether the person transacting is actually who they are? So identity. I mean, is that something that has been cracked? What's the balance between knowing who the person is, so you have the richness of data, versus really being sure that they are? I can tell you that regulators and governments watch this very carefully, right?
Oh yeah, Sebastian just mentioned the US. US is still not fully on EMV, for example. And in most countries, you saw already years ago the move towards chip and PIN. Online, you see more regulators creating frameworks around SCA, 3D Secure. So to authenticate yourself properly, both online and offline, and to have providers able to give these kind of these technologies to merchants, that is key. In a physical environment, I am not too worried anymore. I would say as long as there's chip and PIN. Online, we see a lot of our merchants asking, can I have this online purchase without the 3D Secure, right? And under certain circumstances, I think it makes a lot of sense. First transaction on 3D Secure, subsequent ones without, for example, for subscription merchants. We, as a provider, have always looked at 3D Secure as a dynamic product. So for someone that is loyal or someone that has a very low risk profile, you probably want to go without it. And then even an anonymous checkout is probably fine to get that transaction in. The moment the risk levels increase, you probably want to know more of your customers. And that, the ability to be that dynamic on the merchant side, I think that's crucial to keep everything under control. Yeah.
Look, I mean, to answer your question, identifying the individual today, that's very, very tough. Most of the infrastructure is more built around identifying that that individual is linked to the credit cards that he's using to pay. And there, you know, whether it's through biometric authentication or through an OTP or even a static password, that's kind of where the industry is at today. I think where, I mean, ourselves, I'm sure Adyen, at scale, what you can start doing is having a risk engine that is able to identify fraudulent patterns across multiple sites. Because usually, you know, there's very sort of, there's very common themes to how an online fraudster will operate. You're going to have the moment where he comes into possession of stolen card data. He's then going to test which of these cards is still active or has it already been deactivated. So for this, you're going to see, you know, a sudden massive spike in algorithm-driven attempts. And then they kind of get dispersed when they find the cards that work, and, you know, they start buying as many expensive goods as possible, as quickly as possible. So, you know, the benefit of working with a large global processor is that we're much more likely to have seen part of that process, and therefore able to start proactively blocking the downstream transactions before the merchant becomes the victim of you know, whatever that person is in the process of doing. And then on top of it, you start getting into sort of device fingerprinting. If I know that you know, this card has been linked to this iPhone that has been shopping seamlessly with no problems for this merchant, you know, does that give me sort of added sense of sort of security when I see that device popping up elsewhere? You know, how can we sort of, so it's really this network effect that, you know, as you start getting into hundreds of millions of transactions and you start realizing that in all likelihood you've touched the vast majority of any given country's population at least once on one of the sites, then you start having sort of data that you can use to be a lot more proactive in terms of how do you warn merchants.
Thank you very much. I think this was a great panel, really exciting. I hope the global audience also learned more about what's happening in the region. We're hoping to welcome a lot from Singapore, from around the world here to shape the future finance with us. A great panel. Actually, we're hoping to have another one. I see Hisham, he's the founder of Lean Technologies, driving open banking. We didn't have enough space, so really hope to welcome more people here in Dubai, join our community and drive the future finance together. Thank you very much, Sebastian, Sander, Rinki, Damantas. Thank you very much.
Thank you.
Thank you so much.